Hey everybody, my name is Brandon from thestockstreams.com, and today I want to talk about Sundial Growers stock, ticker symbol SNDL. What I want to do first is go into Google and talk about the macro picture and how that's affecting Sundial Growers stock, and then I want to go into the earnings report to talk about the fundamentals, and then I want to go into the trading charts to see if there's a level or two to buy Sundial Growers if we want to buy Sundial Growers. So now let's get started. So here we are in Google, and as we can see, in about a week, Sundial Growers stock has fallen over 30%. So there are really two main things that analysts believe are causing the stocks to fall, and that is the secondary stock offering and also the fundamentals of the business itself. However, if we look back at a 6-month view of the stock chart here, we can see that Sundial Growers has actually had a pretty good 6-month run, over 500%. So let's first address the main bull cases for the stock, why it's up 500% first, before covering why the stock fell 30% in the last week. So the main bull case for Sundial Growers is that the industry that Sundial Growers is in has a relatively high potential for legalization and growth in the coming years because we are now under the Biden administration and a mostly Democratic Congress. This is not just federal legalization that has high potential, but also potential for state legalization. If we look at the recent news here, Governor of New York Andrew Cuomo recently commented on the state of New York's legalization. Again, this is probably the biggest bull case for Sundial Growers industry because it opens up the total addressable market for the industry. This will be good for companies like Crisco Labs and others who have exposure to the New York market. However, looking at Sundial's penetrance in the market, it does look like Sundial is focused mainly on Canada. And this is a screenshot from Sundial's own website on the stores that it has. Even in the states that are legal, like California or Colorado, from Sundial's own website, it does not appear that they are interested in penetrating the United States market. So because of that, yes, legalization in the United States could be a tailwind for the industry, but it does not appear that Sundial is actively pursuing the United States market. We also have to mention the Wall Street Bets crowd here and the impact that they have had on the stock as well, which drove the stock to this top. The momentum game has definitely been a bull case for the stock, and you have to remember that investing based on momentum is pretty risky. But now let's head back into Google and take a look at the news of what's going on in the stock here. And we can see that a lot of these articles are pretty negative. So the question is, why are the analysts so bearish on the stock that has risen about 500% in 6 months? So as I said before, there were two main complaints that the analysts have on Sundial Growers. The first is share dilution. The main issue that this Motley Fool article is talking about is that Sundial Growers has filed to raise about $800 million United States dollars by doing a secondary offering, which means that they are absolutely opening up the fire hose to increase the number of total shares in circulation. This is the main point that I want to make in today's video because share dilution actually matters. Because now there are more shares in circulation, if you want a share of Sundial Growers, you don't need to outbid the person that already owns the stock. Instead, you can just pick up a share from the secondary offering. Because of that, if you want to sell your share of Sundial Growers, you will need to lower your price that you ask for your share because now there are so many shares out there to choose from. One of the big bull cases that I've seen on Wall Street Bets was the short squeeze. So what this secondary offering actually does is that it allows the shorts to cover the short selling without having to outbid the holders who are already holding the stock. So to explain this visually, so if there are 10 shares in the overall company owned by one person and you need 2 shares to cover your short, then you need to offer a higher price so that the holder will be more enticed to sell those shares to you. However, if there are 10 shares of the whole company owned by the same person and you need to buy 2 shares, but now the company is offering 8 new shares into circulation, then you don't really have to raise your price to entice that shareholder to sell. Instead, you can just pick up 2 shares from that new offering. This is why secondary share offerings are harmful to the stock price and also to investors, and why you should pay attention to this when it's happening. So that was one of the gripes that the analysts were having about Sundial Growers. So the second complaint the analysts were having on Sundial Growers was the fundamentals of the business. And in order to see that, we can look into the earnings report. So, firstly, I don't think most people are investing in Sundial Growers right now because of the fundamentals. They are investing in Sundial because of the momentum. So to analyze momentum, you really look at the trading charts and not the fundamentals. But for those of you who want to see the fundamentals of Sundial, which, I suggest you do if you want to invest in Sundial, then here we are in Sundial Growers earnings report. So the first thing I want to point out here is that Sundial's earnings report is really not easy to read at all. You get a bunch of weird stuff in here that you don't normally see, like excise taxes, like inventory obsolescence, and like this weird like change in fair value for biological assets. Further down in the earnings report, they do explain what these things are, but honestly, to me, this is kind of like a yellow flag here. It's good that they report it so that we see it, but it muddies the numbers up so much that it may be doing more harm than good. So for me, I'm just going to analyze pure gross revenues here. I'm just going to analyze pure net revenues, pure cost of sales, and lastly, the three main sections of the operating expenses down here. So firstly, starting off with the gross revenues, we see that yes, we are growing year over year in gross revenues, with this being the most recent year ending on December 31st, 2020. However, we are only growing by like 8% compared to the 2019 number. If you are a business with a market cap of $2.2 billion, when you are not making any money, if we look at down here at the net loss, we see that we're actually losing about 239 million Canadian dollars, then really the one thing that people usually say to justify the expensive valuation is that the company is growing. However, at an 8% growth rate, it's not really growing as fast as I want to see. We also see that taxes here are taking an immense cut of our profits. Taxes are growing like 400% year over year, but our revenues are not growing 400%. So because of that, even though we made more revenues here in 2020 than 2019, if we look at our net revenues here, we are actually capturing less net revenues in 2020 than we are in 2019 because we had to pay all those taxes to the government. So again, not really what I want to see when I'm looking to invest in a company. The last thing I want to talk about in the earnings report is these three operating expenses here. So yes, year over year, we are tightening our belt in expenses, and that's a good thing. However, take a look at the decreased spending in research and development. This is definitely not what I want to see when I'm investing in a company for growth. In order to set yourself up for future success, you need to invest in your product and your technology. You need to innovate so that you have a chance to compete against larger, more established players. Cutting your research and development spending will definitely not help innovate products. But again, the reason why people are investing in Sundial Growers right now is because of momentum and not the fundamentals. So, let's head on over to the trading charts to see if there's a level to buy Sundial if we want to buy Sundial. So here we are in Sundial Growers trading charts, and we can see that we've been really waving out after falling from our initial momentum burst back in early February. Looking at the support and resistance levels here, we are actually at a pretty good long-term support level around this $110 to $120 level. We can see that this was the level that we actually broke out from before the initial momentum burst, and then when we came back down, we tested this level a couple times, once over here and once over here, and now we are right at this level again. Again, for a short-term trade, I do like stocks that are waving out in this pattern here. The reason is because I can buy down at the support level here and then trade it up to the resistance level around 150 or 160 and make a few percentage points. However, I would normally want to do this with companies with stronger fundamentals. The reason for this is because if a company that I like long term, like a NEO or like an Nvidia, was waving out in this pattern and I wanted to trade the stock short term, if the stock breaks this support level, then I am fine holding the stock because I'm pretty sure that this company will come back because the company has good fundamentals. However, with a company like Sundial Growers, I personally do not really believe in the company long term, so if it breaks this support level, I don't really want to be holding shares of the company. That said, if you do like Sundial Growers and if you do believe in the company long term, then you could do the trading pattern here. You could buy down here in the 110s and then trade it up in the 150s and maybe even 160s. And then that would be like a good 30 or 40% gain if my math is right. However, for me, I'm not really too keen on adding more risk to my portfolio than I already have. So, this trade is not for me. Looking at the MACD here, which is this chart down here, we see that our blue line is underneath the orange line, which means that our short-term momentum is weaker than our long-term momentum, which tells me that there could be some more downside momentum for the stock. The RSI here, which is this chart over here, is not really telling me anything because we are kind of waving out calmly here, neither going to the overbought territory no other oversold territory. So that was my review on Sundial Growers stock. Let me know what you thought about it in the comment section down below. If you have any questions or if you caught any mistakes, also drop me a comment down below. If you liked the video, please like the video. If you haven't subscribed yet, please subscribe. And as always, thanks for watching and I hope you have a great day.